All right, good afternoon. Good afternoon. Look at that after lunch. They're alive. It's humanity in the room. Because today we're talking about AI, machine learning, predictive analytics, what is next in banking. My name is James Robert Lay. I am the founder and CEO of the Digital Growth Institute, author of the best-selling book, Banking on Digital Growth, and podcast by the same name. Joining me today for a very important and I hope to be very engaging conversation, which is up to all of you. They have a lot of insights that they'll be sharing, but as we were talking ahead of time, we're gonna get grumpy if we have to talk for 45 minutes without some level of interaction and engagement, not with this audience, because I don't look at this as an audience. I look at this as a community of like minds. We are all working to learn, to grow, to be even better together. So do we have a deal? Can we get some good interaction today? Yes? Thumbs up? Okay, fantastic. So joining me today on stage, we have Bill. Bill, can you help me with your last name?
Sure thing, no problem. DWORSKY.
DWORSKY. See, normally when I do a podcast, I do all the checks and the balances, but he's here to help with that. He's a manager of financial services industry at Deloitte. On the end, we have Emily, ABBAS.
ABBAS.
ABBAS, see? Take two. I'm flunking out already.
You got one more.
I've got one more.
Lair like bear.
Lair
Mark
like bear. Mark Lair, Director of Data Analytics at Segmint. Emily is the SVP, Chief Consumer Banking and Marketing Officer. Thank you so much for joining all of us today. You know, when it comes to topics like AI, machine learning, predictive analytics, just to get a sense and feel for everyone in the community today, how does that make you feel? If it makes you feel good, positive, happy, raise your hand. Okay? If it makes you feel a little bit scared, confused, curious, overwhelmed, raise your hand. Okay. It's the same people that said it makes them feel positive and happy. So we've got a good group today. I want to start off with some perspective setting to provide some clarity around these acronyms: AI, ML, predictive analytics, PA. Because I think when we have a lack of clarity into what these are, it's very hard to conceptualize what the potential opportunities can be. So Bill, can you start us off? AI, ML, PA.
What are these things?
What are these things?
Yeah, I'll share some quick thoughts, and then if others want to chime in, that's great too. But I mean, if we start from a very basic level, artificial intelligence really just represents the ability for what we call computers to basically learn to do things better without human intervention on a path that we've often built or funneled into their development. So I think the lack of human intervention is an important distinguishing factor between artificial intelligence, i.e. some form of intelligence to continue on a path, versus just predictive analytics, which can be something that's more of a stagnant model from the outset. Machine learning related to the lack of human intervention that I just referred to, so we sometimes see AI and ML used very much in tandem.
So lack of human intervention. How does that make everyone feel? That's a nervous laugh. That's a nervous laugh. Now, I want to come over to Mark, because where are we today when it comes to things like AI? I remember back in 1999, someone predicted, and I forget exactly who it was, essentially the singularity, where AI would reach human-level consciousness by 2030. And that can feel like a very scary proposition, but where are we right now, Mark?
So I'm fine with Bill's definition, but I'll disagree with him a little bit on the lack of human intervention. I don't think there is a lot of true AI today in the way we think of the singularity. People imagine what was it, Watson winning at Jeopardy or Deep Blue winning at chess and these great engines. But that, I think that in reality, a lot of the things that we think of as AI today in practice is driven by a lot of human intervention from like a data and a training set. So I come to this problem very much from a data perspective. My whole last 15 years of my career has been about labeling and cleaning data to get it ready for predictive models and analytics, and that's just a critical point. I don't think there's like a super machine that you can just point at a problem without any training and it's going to go solve it, and then a few days later it's going to actually decide, oh, that's a dumb problem, I'm going to go solve this other problem, which that would be true intelligence.
That's scary.
Right, and we're not even close to that.
Agreed.
So I think like the data prep part and the inputs that you put into these models is really important and is human intervention.
So with that perspective in mind, does that make everyone feel maybe a little bit better about the future? I see some head nods and smiles. Good.
I'm going to bring the smiles. Bill's going to depress you, but we'll balance.
Okay. Everyone who raised their hand when it came to AI feeling a little bit confusing, a little bit scary, a little bit curious about it, raise your hand again if that was you. Just for context. Okay, perfect. Because I want to take Emily back to 2017. You were here, and you were in a workshop, and within the first 5 minutes, you thought, man, oh man, I'm feeling just like the community here.
So my role today is to make you all feel like there's hope and you are not behind. I'm with Bankers Trust. We're the largest community bank in Iowa, about $6 billion in assets. And I was sitting in your seats in 2017 at a pre-workshop to this conference, all about data analytics. And they started off by saying, we assume you all have a single source of truth with clean data, you know what's there, and you're ready to be here to learn how to use it.
And this was 2017.
So about half hour, I stuck it out for about a half hour, and then I was like, this isn't where I'm at. So hopefully, I'm the 101 version today. Whether you're at 0 to 100 on the AI, machine learning, predictive analytics, use of data road, wherever you are, keep moving up incrementally. We'll talk about some ways to do that. The only fault is if you aren't trying to move forward. So I'll try to add some stories of hope along the way.
Well, that's a great point, is you talk about the only fault is if you're not trying to move forward. And this is all about learning. This is about making progress. And you measure progress, and I think that's a great takeaway when you think about the journey you're taking around AI and ML and predictive analytics. If you always look ahead towards the future, it can feel very confusing, scary, and overwhelming, but you measure progress not by looking ahead to where you have to go, you measure progress by looking at where you've been, but I think even more importantly, identifying and owning the lessons that you've learned along the way, which is where I want to stay with you, Emily, because you have learned a lot of valuable lessons that I think might be able to help shortcut some of the knowledge for those in the community here today.
Sure. So I think part of the lesson is knowing what can you do yourself and what do you need to partner with others on. So we're working with FIS, we're an FIS bank, on things like basic spending insights. There's an advanced version coming that we'll transition to next year, but that tells you things like, hey, you've signed up for a free subscription and now you're being charged. Is that something you really want to be charged for? Or, hey, you've been charged by the same vendor the same amount in one day. Is that an accidental double charge? So watching those kinds of things. Also, we partner with MX for our personal finance manager. That's where you can aggregate all of your financial picture into one. And it says, hey, gosh, your spending or your balance is way lower than it used to be. What's going on? So there's some of that predictive analytics and watching your own data that you can use with other vendors. I know we were talking before your product through FIS's Pinpoint, and our team, some of which are in the front row, shout out to Bankers Trust. We're excited to get on that tool in the coming year or two as well, because it's a great product. So some of it's knowing what you can do with others, and then I think later we'll share some examples of things we're doing ourselves.
Yeah, I would just echo that that's not necessarily a small community bank consideration. You see that I spend a lot more time with middle market, super regionals, 40, 60, 100 plus million dollars in assets. And that decision about build, partner, buy capabilities, whether it's AI or otherwise, is really an important one. And there are all kinds of examples about other organizations that have chosen to take one path or the other. Some that are very much, we're going to build everything that we can in-house. If you look at an organization like Capital One, for example, they think of themselves often as a technology company masquerading as a bank, whereas others are very much next on the partner and kind of outsource or buy capabilities wherever they can. And a lot of the efforts or investments in technology customizations and AI solutions that some of the larger banks tend to make and have the capital to do so with become those types of out-of-the-box capabilities or solutions that are easy to quote-unquote plug and play in lower scale.
Well, I think that's a great point. Is when you're looking at AI, ML, predictive analytics, a lot of times we think, how are we going to do this? And if there's one thing that I can encourage everyone to take away, is to put the who before the how. It's like, who do I need to collaborate with? Who do I need to work with to bring this new capability to bear? Because it is an exponential upgrade. And I think for a lot of financial brands, I say that the 3 C's hold us back. It's capability, it's capacity, and it's cash. And when it comes to capability upgrades through AI, through ML, through predictive analytics, begin to think, who do I need to collaborate with instead of just thinking, how are we going to do this? I think the other thing too is being aware of roadblocks that can stand in the way, roadblocks that can trip us up. And one of the things that I think about when it comes to roadblocks is accuracy. Like, how accurate are these models? And if it's not 100% accurate, well, we're just not going to do it because it's not 100% accurate. What's your take on this, man?
So I think when we do talk about AI and predictive models, and I'll maybe make a distinction for some of the things Emily's talking about, those are really more descriptive insights that you signed up for a new subscription, or you did make a payment twice versus predicting something that's going to happen in the future. So I think for those descriptive insights, it is really important that be accurate. You can't tell a client, oh, did you sign up for a new subscription? And they go look and it's, well, what are you talking about? Versus when we think about predictive, from Segment's perspective, the work that we do is taking core data and transaction data and cleansing it and turning it into insights for our customers. And that typically feeds into our marketing automation solutions so you can deliver messages. And so a lot of our clients historically have been looking to, I want to send out a campaign for mortgages or HELOCs. And so they're going to take all the insights that we've produced and create an equation and develop a campaign, and it's a human-created equation. And those aren't going to be 100% accurate. You don't have 100% conversion. So where we've transitioned into AI is to build predictive models based on a target scenario of people that we've seen open up a mortgage or a credit card or whatever it is in the past. And then our machine learning engine, instead of a human-generated equation to identify that population, it's going to look at the whole universe of variables that we've developed to figure out which ones have the most predictive power. And we deploy that, and that becomes the audience upon which you're delivering messaging. But that is also not 100% accurate. It's better than a human-created one.
But what about like lifts? Like, sometimes the lift might be, and you mentioned earlier when we were connecting ahead of time, a 1%, a 2%, a 3% lift, which might not seem a lot, but when you're working with hundreds of millions, if not billions of dollars, that can be a huge impact.
Yeah, so I think that's one of the big challenges that we faced when bringing our AI modeling out to the market is again, AI as a buzzword. People imagine something a lot more like incredible and accurate than it actually is, but really you can get tremendous gains with small lift. The example I shared with you, James Robert, was the data scientists we work with used to be in the auto insurance industry, and they're just in, albeit data nerd for a second. In statistics, there's a concept of R, which is just the goodness of the model, basically. And the auto insurance industry operates, the billion-dollar industry, multi-billion-dollar industry, operating with models that have an R of 3. That's like a 3% lift over no model at all, and they're making money based on that. And so when we think of deploying predictive models, we might see conversions of like 5 or 6% of it. We're identifying, we have an attrition model. We're identifying 1 out of 10 people who left the institution. We've identified them in advance, and people are like, oh, that sucks. But actually, that's great. That's way better than you can do, and you have to think about how does that really cascade down to the bottom line. So 3% increase in mortgages, or 3% better targeting at auto loans, or 3% reduction in attrition over nothing, that actually is really meaningful. So you have to combat the idea. Our VP of marketing used to say, wow, 70% accurate, that sounds like a C-. Well, we're not, these aren't school grades. So
It's like
small
the,
lifts can
well,
be
it's like the
meaningful.
weather, right? It's like the weather.
Yeah.
You know, you can do a model based upon the weather. I actually wanted to be a meteorologist when I was a kid and go chase tornadoes, and here I am talking about analytics. But it's only as good as it can be. But it's still that's the thing. It's a predictive model, and I want to come back to the point of analytics because it's something that I've heard all of you talk about. And analytics does not mean AI, does it, Bill? Like, do we get confused? Is this a misunderstanding sometimes?
I think a lot of folks use them interchangeably when they aren't necessarily intended to be. And some of it comes back to what Mark was describing a little bit earlier about the distinctive definitions of AI. But there's all sorts of ways to quote unquote do analysis without artificial intelligence. And on the flip side, though, there's probably not a whole lot of good ways to quote unquote do artificial intelligence without analysis. I'm not sure if
I would think analysis is a precursor to getting to AI.
Yeah.
When you talk about the path, that's why 5 years ago they're assuming you have data prep done. That's what my business does, is the data prep, and that's the first step. And then you're going to do analytics, and then you're going to progress. So I agree.
Yeah, I was trying to think of an exception there, but couldn't really think of one on the spot.
It's like data is ones and zeros, and then you get to the analytics, and then the analysis, and then turning that insight into action. And when you talk about some of the challenges, regardless, I think, of where you are on the journey, but Emily, you can speak to this, it's the need to work with the willing to get some momentum, to get some wind in the sails, to begin back to how we started this conversation, to start to make some progress.
Yeah, so we talked about the biggest roadblock being cultural transformation, and I think even 5 years ago we knew that. But in my mind, I thought, oh, we've moved our culture forward before, and when you think about employee engagement, but no one wants to work for a place that's not engaging, so everyone is on board. So when it comes to a data-driven culture, or a culture that's going to rely on these even more advanced tools, it's harder to get people on board. And so the example that I use from 5 years ago is we had leaders that said, hey, we don't need marketing, we're commercial lenders, just give us an annual report. I said, okay, let me prove you wrong. And now we've got marketers that are just ingrained in that business unit, making a difference every day, and they wouldn't be hitting their loan goals without that team in that mid-market commercial space. And so I'm kind of doing that same thing with our data teams and our modeling teams is, okay, commercial lending and wealth management, if you don't want it, we're going to work with the willing on our team here in consumer, and you're going to see all the great things we're doing. And by the way, we might even throw a little win your way, but you're going to want to be a part of this someday.
It's a matter of helping. There's really, I say, 4 pieces to transformation. First and foremost, you have to help people see things differently than how you saw them before. And when they see things differently, then what happens next? What's the next thing after people see different than they what? They think differently. And then I've asked this question to thousands of financial brand leaders, probably over the course of really like the last 5 years since I have been thinking a lot about this. It's behavior change within an organization. I see different, therefore I think different. I think different, therefore the assumption is I'm going to act and do different. But to bridge the gap between the thinking and the action, we must really address the feelings and the emotions here, because it's the desire, the feelings, the emotions to transform, to do something different, has to be far greater than the desire to remain the same, which is exactly what you're talking about. Show, don't tell. Where are you seeing some of this action happening through your lens of the world, working with organizations?
Yeah, I'll share a couple examples. I think the overall theme that he's calling out here is that humans plus computers or humans plus AI will always beat either one of them separately. So some of the scariness in the room, and again, I promise I'm not the scary one. I like smiling, happy all the time. Is stemming from fear of quote unquote is my job going to be replaced by a computer, or is AI going to do everything that I thought I was?
Fear of the unknown, right?
Yeah, fear of the unknown. But really more and more of the recognition and value is oriented around what can AI or predictive analytics enable teammates, practitioners, frontline staff, everyone in the organization to do more effectively and better for end customers. Whether it's a commercial banker who gets a big lift from AI-driven recommendations that he can take to clients, or a contact center servicing agent who's trying to talk to someone on the phone who's getting kind of a live feed of notes or recommendations on either a product offer that they might be able to offer the customer by phone, or a reminder or recommendation about something to share with the customer about a notification or update on their account, or a connect the dots between that customer and a family member who may also be a client of the bank's. All of those sorts of things being kind of at the fingertips of that servicing agent make for both a better servicing experience for the customer, making them feel like, quote unquote, the bank knows me as a person and not just an account number, but also ultimately will improve things like cross-selling and kind of multi-product rates with customers, and lower complaint levels, higher NPS, like all of those types of kind of indicators that we used for performance and results.
I want to stay with roadblocks here for just a moment and think about yourselves. If there is a particular roadblock or a challenge that you're struggling with, we have a microphone in the middle, or Maria can also run the microphone too. There comes Maria. Thank you, Maria. If you have a roadblock or a challenge that you're thinking about that you'd like to get some perspective and feedback from the panel here today, please raise your hand, and Maria will bring this over to you. There you go. Here's a question.
Okay, so when you said you started with clean data, can you dumb that down even more? Like, what's the start? Because, we know our data's a mess and we're getting ready to implement AI, and that's frightening.
Well, first and foremost, before they answer that, do not ask my kids to clean your data because they can't even clean their rooms.
I think it's partnering with really great members of your technology team, those on your teams that work in the systems. And figuring out what systems you have, what information you have, and where is it, and how can you connect it to make it more meaningful. So if we have mortgages on an Encompass system, we have a CRM system that some people are using, some people aren't. We have our core system, we have a SEI system for wealth management. Those don't all talk. So that doesn't tell you information about if one of your business customers is also the owners in private banking, and tie that data together. So if you don't have someone internally, I think we actually partnered with an external consultant to help us with that journey in the beginning. I think where I thought it would take us isn't where it took us. I thought we'd have this chief data officer with all these direct reports up through marketing. And where we are is we've got the best data source ever. He's sitting with our branch administration, our branch operations team, and it's the perfect spot for him because he knows the business. He hears the business every day. He reports to Sarah, who leads our sales training team, and he adds value every day. And so I think going into the journey, just asking a lot of questions and getting all the smart people to the table, bringing in help if you need it, but not necessarily, it may not go exactly how you expect it either.
If I can add to that, just because that's what I'm focused on from a career perspective. I think absolutely getting all your data from disparate systems into one place to have like a single record about a customer and everything that they're doing. We spend a lot of time on transaction data, which is notoriously messy. Just the descriptions are not coming through in a clean way. So I've got a team of 6 library scientists that every day they're looking at all the different ways that you might see a Starbucks or a Wells Fargo. Wells Fargo mortgage is a great one because it might be WFHM or Wells Fargo MTG. There's thousands of variants. And what you want is to reflect all the Wells Fargo mortgage customers in a single, nicely labeled way, so that when you are doing analytics, it might be as simple as, hey, I just want to pull an audience of everyone from my data warehouse who pays a mortgage to Wells Fargo without having to do regex and SQL to get that list, all the way to, hey, is the fact that someone pays a mortgage to Wells Fargo predictive in a model? You got to have that data labeled ultimately.
And that's something we did years ago too. We had a competitor moving into our market, a larger big bank. And the first thing we did was look at, of our current customers, who's paying a credit card or a mortgage to that company. Because that's most likely who they're going to go after, especially in certain radius of where their branch is. So it's just, sometimes it's simple, just connecting the dots, knowing what you have and deciding how to use it in a meaningful way. It may not be automated yet. It may not be predictive yet. But like I said, we're all on a different place on that scale.
That's a fantastic question. As you think of other questions too, feel free to raise your hand. Oh, we have one right here.
The use case that I usually see is the bank hires a lot of data scientists and they work on specific cases. Have you seen any movement towards everyone in the company being able to access information and in a simple way being able to make even smaller decisions using the data? In other words, how can you bring data to the most amount of people in the company in an easy way, considering that we're not all data scientists?
So I think that's a big aha I've had, is that it's not just the marketing team or the branch administration team that needs the data or the technology team, it's your frontline team. So if you're going to be making recommendations through your mobile app or through your online banking channel to your customers, you also have to arm your bankers with those same recommendations. And so if they don't have access to those tools when a customer comes in and is in front of them, or call center, we talked about someone calls in, they should have that opportunity to make that next best offer or make a recommendation to that customer in the same way that your technology can.
Yeah, I'll add a couple thoughts on that. There's kind of an organizational design question embedded in your question. Like, we have a bunch of data scientists. Like, should they be centralized, or should we have, more of a data-enabled teaming model that sits across the entire bank, regardless of line of business, whether it's wealth or commercial or consumer? Emily, I thought you shared a great commentary on your example earlier about we're going to do all these great things in consumer and then share some of the goodness or kind of chalk up a win in commercial and get them up the adoption curve. I think the way to move quickly on that curve is to develop some very small scale but productive and results oriented, like, tests, if you will, or proof points and use cases that you can use to drive adoption and make ultimately the cultural change that Emily was referring to really something that is spread across. I think that helps to overcome some of the knack toward centralization that you're referring to.
That's a fantastic point. When you're talking about the organizational kind of design here, there's a methodology that I call the 90-day growth method. And it cycles through the 4 seasons that lead to exponential growth. Season 1 is learning, season 2 is thinking, season 3 is doing, season 4 is reviewing. And as you cycle through these seasons of learn, think, do, review, you can continuously find opportunities to be even better than you were before. And I think that culturally, that is a very different operational model at a macro corporate level. Now, that might be in independent pockets, but that's how you continuously are refining, learning, getting even better, and looking for opportunities. And I want to flip up to the opportunity side, because it's important that we identify roadblocks. But what are the opportunities? And I think the opportunities, once again, kind of comes down to communication. I think many times when you think about AI, ML, predictive analytics, there's a lot of math. It's a lot of intangible, theoretical models. And what's your take on that? Because how can you effectively communicate the models and the methods that others might not understand to provide them with some clarity going forward?
You know, I think anything for data. If I were to ask you, hey, in this room, everyone raise your hand, are you interested in data? And everyone's, a lot of hands go up, but data's actually kind of boring. What people are actually interested in are the outcomes that you get from the insights, and that's how you get people excited, is getting the adoption, is showing the outcomes, and not scaring them with, when we're talking about predictive models like recall and lift and precision and accuracy. And we made some mistakes spending a lot of time trying to communicate and educate our customers about what all those things mean. But what people really get excited and how you get a data-driven culture is to show some of the positive outcomes that are tangible to the business. So to get back to the earlier point, that the predictive analytics and the AI, they're your teammate, they're your friend. They're not here to replace you. They're to make you a more effective financial institution and help you do your jobs better, particularly in the community bank space, where the competitive advantage is the people and the personal relationship. How do you scale that when you don't have the opportunity to look a client in the face and shake their hands anymore? That's investing in the data, but focusing and driving on the outcomes. That's what people want. There's a lot of complexity and math and details that people can get lost into the weeds and can torpedo this initiative before it even starts.
I think the more that you can paint a picture of what the future could look like for someone else within the organization, in story and narrative, it's so critical to show and not tell. It's show them what that can look like. And I want to get practical here because, Emily, you've got a couple of really good use cases that for the community, they could take back and say, I learned this one or two things, these opportunities that are very practical that you've been able to apply if you think back over the last 5 years of your own journey here.
Sure. So an example from this year is our in-house data expert worked on a churn model. And so looking at what are those factors that get a customer to stay with the bank, or who's most likely to stay with the bank. So again, more retroactive looking than forward looking, but we found that customers on the consumer side that have a loan with us are 25% more likely to stay with us. And so we had a big HELOC promotion earlier this year. We also timed it really well with knowing rates were rising and getting people locked in, but we've closed over 700 HELOCs this year, and in a normal year we close 200. So we suddenly have about 500 more customers who are more likely to stay with us because of that. And your gut tells you that's the case, but now we have data that shows us that. Or what we're excited about for next year is data shows us that customers who are in our benefits banking, so our tiered banking, and the higher level they're at, the more likely they are to stay with us. I'm not sure most of our customers know what level they're at. And if they're competitive like I am, and I find I'm in silver and not gold, or gold and not platinum, heck yes, I want to move up that spectrum. But they also don't know what it would take. So how do we then start? We probably will start with some campaigns that are based on these are the most likely people and the easiest moves, but we're looking to automate it so that it is more real time. So you get an offer or advice that says, hey, if you only used your debit card 3 more times a month, you would actually be in platinum tier and you would be getting our best rates for CDs right now, because everyone's complaining about CD rates right now, or wants the best CD rates right now. So just those easy things, or hey, if you opened a savings account with us, you would jump up 2 levels and you would also get this great benefit. So it's that what's in it for me. And so that's something I'm excited to partner with our whole team on next year and see how far we can go.
So you're taking what I call ADA, which is analytics, data, and AI or automation, and then you're also providing your customers with clarity and recommendations on what they can do to make their lives even that much better going forward. Looks like we have another question here from the community.
I think you actually answered my question, but there's a little bit of anxiety around AI, given it takes time to clean the data and then train the models and those types of things. And when we're in these meetings, we're talking about mass innovation, and it seems like AI is more incremental growth as opposed to totally changing the model, because when you change the model, then you have to retrain the model, and then how long does it take before you actually get to the point where you're just like, okay, this model is what we're going to be using? Or is it just a continually changing of the model? Is that the innovation? I'm not a data scientist, but I'm just trying to connect the dots.
Mark, do you want to start? I'm happy to start either way.
Yeah, and I can speak to that. So I think it's a boiling the ocean a little bit if you're trying to get to the finish line there's a lot of wins along the way as you go. Also, I'll say that as you cleanse data, just as one example, go back to we help our clients identify where mortgages are being paid. So the Wells Fargo home mortgage, but most of the time when we go through that exercise, the top 10 places where people are paying mortgages do not align exactly with what the institution thinks that list is going to be. So there's a win. There's some insights that you get right away. So don't overlook those small wins along the way that can really have significant impact on making those are insights that can help you do a better job engaging with customers. But to get to the data modeling piece, ultimately, if you're doing predictive modeling, that is something that should be retrained on a regular basis, so you're taking advantage of new data that's coming in. Our approach, and we try to bring this modeling down market, so we've spent 12 years getting great at cleansing data. We've built an auto ML platform on top of that generates models. It's probably not gonna be as great as if you hired 3 data scientists and pointed them at a problem and had them focus on it for a year, but it's automated, so on a monthly basis we can retrain the model and identify new predictive features. So that's our approach, just to try to solve some of those problems and bring some of this predictive modeling down market for institutions that really realistically aren't going to have a whole team of data analysts and data scientists to work on a specific model.
Yeah, a couple of things that I'd add on. First, echo the sentiments. A couple of things that I'd add on. One framing on this might be to look at things from a marketing lens on a campaign basis. So when we shared a couple examples about growth in HELOC or recommendations on CDs, like you can think about each of those things as a kind of discrete or finite marketing campaign that requires some planning, some thought, but also some analysis beforehand that answers questions like, what do we actually want to offer? How do we actually want to message the offer? How do we want to target customers to get the offer, et cetera? And each of those things can be informed and in some cases rapidly accelerated or enhanced and improved by the types of kind of deeper ML or predictive analytics that we're talking about. So, each time you're thinking about, hey, this is my set of campaigns that I want to plan for the year. Here's my marketing budget. Here's the kind of general roadmap that I want to go on. Like, think about how am I going to be, refreshing, updating, learning from each campaign, and quote unquote retraining where it's appropriate versus where may it not make the most sense from a time or resource investment standpoint.
One of the thoughts as you're talking through that, very practically speaking at a campaign level, do a little bit of work ahead of time. Do that review before you begin. Review what you have, learn through the experience, learn through that insight. Think about how you can apply it by doing, and then review it to do it even better again. Just repeat that cycle. I think as you were talking as well, it's, just for context, who's run a marathon? Anyone run a marathon in here? A couple people? Okay.
Sunday, I just did one Sunday.
Gosh, you guys are making me look bad.
Good for you.
I did a half.
And then
Can
came
I raise
here.
my hand halfway?
So, like, this is a really practical, conversation to take back to the organization. For those that have run a marathon, and I've run a couple myself, you just didn't get up and run a marathon. Like, that's why there are platforms like Couch to 5K, Couch to 10K. You're getting those incremental wins, and you're building your level of confidence, I think, as you're going forward, because you're measuring the progress, right? So it's like, you don't think that you have to go from, there's no app, there's no training program out there that says Couch to Marathon. It's always those smaller incremental wins that you're taking along the way, which, Bill, I want to come back to you. Another opportunity for growth when it comes to AI, ML, and predictive analytics is around opportunities for credit. What are you seeing there?
Yeah, I think one of the general themes on that front is basically expanding the credit spectrum or expanding the credit box that you can confidently underwrite in for the organization. Like there are a lot of legacy or existing credit models that are limited by either one, stagnation, or two, limited use of a narrow set of data. They're over-indexed on FICO score, for example, as an input to a credit model, which can basically block out or restrict the amount of the customer base that you could potentially be lending to. Rethinking credit model, considering additional data sources, but also rethinking how you structure that lending approach can basically open up 10, 20, 30, 40% of the market set as an addressable market for you, whether you're thinking about things geographically, local community, or a state, or in the digital universe across the board. So that to me is a huge opportunity, like serving the previously unserved or underserved customer set on the credit spectrum, regardless of product, whether it's secured personal mortgage, unsecured personal auto. All of those are kind of ripe in my view.
We might have time for one or two more questions from the community for the panel. We have one over here. While the mic is getting passed, I want to come over to you, Emily, because you have a very practical use case as well of where you were literally able to help someone in a very unconventional way because you did see a delineation or a difference in other spending patterns.
So our financial intelligence team uses a platform called Verifin, and every day there are alerts that come in that they say, yeah, this is a good one, this isn't. So the machine learning part is it gets better and provides better alerts each day. We had a customer whose spending and payment behaviors had dramatically changed. She was a college student. She had a direct deposit, was spending money at the places normal college students do. And then that direct deposit ended, and the only place she was spending money was on delivery food and a storage unit. And Verifin also caught her phone number showing up on an ad for sex trafficking. And so we were able to turn that case over to the authorities and help this individual. So this does make a difference. You can make a difference. Data can watch those patterns and show where there's things that aren't going the way they were, and really let's look at those and see if we need to step in and get involved. But I'll say what you said earlier is there's got to be the human element. You can't just rely on patterns. Just 2 weeks ago, we had a private banking customer who lost $1.5 million in a cryptocurrency scam. And it wasn't an odd behavior for him because he had very erratic spending behaviors. It showed up a little late, but it wasn't something that was outside of his norm. So educating customers on scams and things that are out there or what to watch for is a big piece of that too. There's got to be the human element, which goes back to something we talked about earlier.
Absolutely. We have a question over here.
Yeah, so you kind of just answered my question a little bit, but like once you get AI built out in predictive analytics for lookalike audiences, how do you take into consideration like the economical status right when the lookalike audience is based off of? Like how do you use like the change of economicals, like rates going up and down when members got the loans and stuff like that? How can you work that into that predictive analytics for that lookalike audience?
I'll take my best shot, but I want to make sure I'm answering the right question. I think the couple things to think about on constructing models are one, and in kind of the context that you're describing, how much does the lookalike audience actually look alike the prospecting set that you're actually targeting, so to speak? So there's a lot of potential pitfalls and biases that you can inject into models by having a relatively small sampling set that you're quote unquote training your model on, or in some other ways kind of too narrowly constructing the base by which you're quote unquote developing your analysis. I think that to me is the biggest thing. We often make assumptions about how an existing customer can look like a new prospect without recognizing the fact that at one point an existing customer was a new prospect, but we didn't know everything about that customer then that we do now. That to me is probably the biggest thing to consider. And economic, socioeconomic variables in a data model can be a specific example underneath that. Are you fully addressing the spectrum of potential inputs or data variables aside from just income? Are you looking at other things as well that could provide a more holistic picture of what the prospect set looks like?
That's where the human element again comes is critical.
Yeah. As we wrap up here, I'd like to encourage every single one of you to just take 30 seconds. Get a pen, get a piece of paper, get your iPad, get your phone, and I want you to write down one insight that you took away from the panelists today. And in addition, possibly, one action that you can take as you go back. Maybe it's just having a conversation with someone in the organization to transfer some of this knowledge back in, to provide them with a little bit of clarity, maybe to provide them with a little bit of help, provide them with a little bit of hope. And as you're doing, I just wanted to kind of just real fast, rapid fire, as we're right here at time, but one recommendation that each one of you can make for the community here, that one small action, because all transformation that leads to future growth begins with a very small, simple step. One small action, 10 seconds.
Walk before you run. You can't use good data if not everyone's entering their data into CRM accurately from the start.
Walk before you run. Absolutely.
And crawl before you walk. I think the first step is always like, just if you want to get into this, first step, do an audit. What data do we have available to us? That's going to be the foundation of your roadmap for starting to clean it and like marching down the path.
You ran a marathon, so I was starting at walking, not crawling.
I was saying,
I was
to do
crawling
before
at
we
the
crawl.
end.
I was going to say, choose to crawl before you crawl, so don't be scared. Like, humans plus computers always beat both humans and computers separately. Like, choosing to take the leap is the important first.
And most importantly, remember why we're doing this. We're putting people at the center of our thinking and doing to guide them beyond financial stress towards a bigger, better, brighter future. Give our panelists a hand here. Thank you so much for joining us today.